Union Finance Minister Nirmala Sitharaman will announce the interim budget in just a few hours. This vote on account, which will outlay the government's expenditure till July 2024, has kept market watchers guessing as to whether or not it will be laced with populist announcements. The quantum of rural SOPs and corporate subsidies, analysts believe, will decide the market mood today and in the days ahead.
Basically, people are looking at whether the imperatives of a weak household situation, especially the rural conditions, if that will compel a lot of allocation on the revenue side and social heads. If there are tax measures which are, let's say, imposing high burden on corporates.
Meanwhile, according to a pre-budget note by Phillip Capital, while the FY25 interim union budget is expected to generate space for higher rural and social spending, pre-poll stimulus may be limited considering fiscal targets that government wants to achieve by FY26. For now, markets are pricing in incentives aimed at reviving the rural economy. But will the cost of these SOPs be too much for the markets to bear?
We expect to meet the fiscal deficit target of 5.9%, and we expect going ahead, this target would be further narrowed to the range of 5.3 to 5.5%. However, this is going to come at a cost, and this cost would be rather disappointing. And we expect such disappointment to emanate in the form of a lowered pace of growth in terms of public capex. So we expect capex growth to decline and decline significantly.
Analysts thus believe a fine balance between fiscal consolidation and capex expansion would be the key element to watch out today. So, what are markets factoring in at the current levels? On average, capex is pegged in the range of 10.5 to 11.5 trillion rupees, while fiscal deficit for the new financial year is forecast in the range of 5.1 to 5.5%. On the revenue fronts, markets analysts said are hoping for increased tax exemption limits in a general election year. Against this, Nirmal Bang Institutional Equities is factoring in net tax revenue growth at 10.9% in FY25, with direct or income tax collection growth at 14% and indirect tax growth at 7%. Therefore, the key numbers to watch out during the interim budget 2024 would be tweaks in income tax rates, if any, allocation under rural focus schemes, divestment target, and government borrowings. Apart from the interim budget, the US Federal Reserve's policy decision announced last night would weigh on investors' mind on 1st February.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.